Let me ask you something. Have you been taken out of a trade and then price moves in your favor? If you have answered yes, you might want to stick around over these next few minutes. As always, make sure you grab a notebook, watch with an open mind, and let's just jump straight into it. So in this video, I'm going to be breaking down a crazy powerful concept from ICT called the power of 3. If you've been getting wicked out by the market, taking losses after false breakouts, or just generally getting a stop hunted, this might be exactly what you need to hear. So make sure you grab your notebook out and watch with an open mind. So without further ado, let's just jump straight into the concept. So the power of 3 is actually, or basically how smart money like institutions, banks and hedge funds, etc., you name it, move price. They don't trade like us retail traders. They manipulate the games to get in at the best prices before making the real move. Remember, this is a theory, okay? Also, they do this in 3 steps: accumulation, manipulation and distribution. So if you can learn to spot these on a technical chart, you're going to start seeing the market very differently, and if not, anything will just be for the better. With that being said though, before I jump on to the logic behind the power of 3, I'm just going to stop everyone here and quickly say that institutions don't actively hunt your retail stop losses or our retail stop losses. You're probably wondering, how do I know this? Well, because if you had done any research towards this before, you would have most likely stumbled across the BIS report, which is the Bank of International Settlement. And in this BIS report, they estimated that as retail traders like you and I watching this video only make up 5% of the daily trading volume or transactions within the, especially the forex market, okay, and just in general in most markets. So in essence, we are heavily insignificant. The problem is that as retail traders, we always place our stops above the old highs or the old lows because, well, that is just what we do. That is ingrained in our system. Therefore, we become an easy target to get stopped out because remember, we're entering off the lower time frames. So a high time frame insignificant move would be a lower time frame significant move. Now, if you haven't heard of David Paul, a famous trading legend who has now sadly passed away, if you have though, you probably heard a viral clip that he was during an interview with UK Spread Betting, I believe, and he had mentioned,
I like to put my entries where the masses put their stops.
There's a lot of power behind that, words of wisdom that he said there, and it's actually very powerful if you understand it well. But with that being said, let's just jump back onto the topic regarding Power 3, aka AMD. Now, logic behind Power of 3. Now, smart money doesn't just YOLO into trades. They will build positions quietly in what is known the accumulation phase. Then they bait retail traders like us into the wrong side during the manipulation phase, which will trigger stops, shake them out, and then they send price in the actual direction that they wanted during the distribution phase. So it's like a setup, and if you're not paying attention, you are the one who is getting played. So this whole concept is rooted in market psychology, impatience, fear, FOMO, greed. They use it all against us. It's one big emotional manipulational game. Okay, so let's break down each phase. Accumulation. Okay, so in the accumulation phase, this is where price is mostly moving sideways. It's just chilling. It's range bound. There's low volatility in the market, nothing really exciting going on in the charts. And most people usually get bored here, therefore they start forcing trades for the sake of being in a trade. But this is where the big dogs, so smart money, are stacking their positions quietly. And if you can recognize this phase, you're already ahead of most traders. So what do you look for during the accumulation phase? Well, you want to look for price bouncing between support and resistance. Okay, you also want to see quite low volume, low volatility, and also this happens often during the Asian session. So we will be applying the AMD cycle and the Power 3 to the market sessions within the market. It can just generally happen any time frame, like for example on a bit of a price chart you see a range, etc., and which I'll discuss shortly. But the easiest way to apply it would be to apply it to the daily cycle within on the charts. Okay, but that boring sideways movement, that is just a smart money gearing up in essence. Okay, number 2 would be the manipulation phase. Now this is where it gets juicy. Price makes a sudden breakout and boom, everyone thinks it's finally moving. Let's get some buy orders here on the breakout, let's wait for a retest. But then nope, it reverses pretty hard. If I just draw it up, okay, it reverses pretty hard. And retail traders are getting baited into this area here. Stop losses get activated and smart money scoops up all the liquidity from these people entering on the breakout, previously selling, etc. and obviously previously buying on the distribution phase, which I'll jump into in a minute. But the key moves and the key signs for the manipulation phase, which is also known as the trap, would be false breakouts. Okay, so a false obviously breakout above this area here. Stop hunt as well. So ever wonder why, for example, your stop loss gets hit perfectly and then reverses? Because you've probably been on the wrong side of the market, or just not on the wrong side of the market, but just a bit too early and not recognizing that you're just part of the manipulation phase. Another one is sudden erratic moves. So if you see like a price randomly move like that, that's also manipulation. So if you've ever been in a position and price just randomly had a huge, algo spike, then that's usually part of their manipulation tactic, okay? And also is big volume spikes as well, like I just mentioned. So basically, this phase plays on emotion, and if you chase moves here, you'll just lunge to the bid guys, okay? The third move is the distribution. Now, this is what we refer to as the real move. This is where the actual trend happens, and the manipulation is done, and pretty much smart money is loaded, and now they're riding price in the intended direction that you're previously looking to trade in. Okay, and what you'll see in the distribution phase is clean, strong trend in one direction, breaking structure, etc., respecting the ranges and so on. And also you'll see the momentum pick up. The breakouts are real now, not fake. Okay, and then this is when you want to ride the move. Now, when it comes to power 3 on a candlestick, if we were to just draw up quickly, what we'll do is we'll draw up the accumulation phase here very quickly. We'll get the manipulation here, distribution here, and then obviously the candle closure. Now, if we were to apply this on, like a candlestick, for example, if this is the 50-minute and then we pull it to like a daily candlestick, you would obviously have the open, okay? The open of the chart or the candlestick would obviously be here. Therefore, the candlestick would open. We then drop higher based on the manipulation, and then obviously we close down lower, or while we go there, we make the low of the day, and then obviously close there. So what we'll do is we'll just mark up the low, the closure and the open of the candlestick. And then we'll also mark up the highest point within the price range and the lowest point within the price range. So if you were to visualize this on a price chart, you'd obviously be looking at this and thinking, well, we have price obviously opened here. Okay, we've formed this manipulation phase here, which is this big wick. We've then formed the low of the day or whatever, depending on what candlestick it is, because this could even be a 4-hour candlestick, so it could be for that within that 4-hour time period. And then obviously we close there to close out the day. Okay, this can close all the way down here, for example, all the way down here. It could even open all the way down here. It could even open all the way up here. Okay, you don't know. Okay, but that's how you kind of visualize it on a candlestick. So have you ever noticed how, like, for example, this candlestick here especially, I'll just put it back to grey, it will have a wick on both ends and a body. That's just the power 3 motion, just on a micro scale. So the wick 1, which would be the low, this is the accumulation, or for example in this case here, the wick high, and then obviously with the wick high, it just depends really on the bias, but wick high, let's just say we'll form the range low here. We'll make it a little bit more interesting, and we'll go from there. So as you can see there, we got the closure and the lowest point, and if we just take a look here, okay, we'll just leave it like that for now, but I'll explain what I'm going to explain. So pretty much you got the wick low, which is usually the accumulation, the wick 2, which is usually the high or the manipulation, and the body is obviously the distribution, so the real move on a candlestick. Okay, so it's the same game, just zoomed in. So you see this on the daily, like I said, the weekly chart, 15-minute, 4-hour chart, 1-hour chart, 5-minute chart, everywhere. Okay, but how do you actually trade it step by step? So if you use this in real trading, let's walk through an example using, for example, the euro dollar. So the step 1 would be to get your higher time frame bias. Let's say we're day trading, you want to figure out where your next daily candle is likely headed. So if you have, like, for example, a daily candle here and the price is making higher highs, etc., with breaking structure, you kind of just want to figure out what the next daily candle is going to produce from this point onwards. Okay, there are many different things you can look at in order to formulate the daily bias. You can look at market structure, is it breaking highs or lows? You can look at imbalances, is it just filled an imbalance? Is it just swept liquidity? You can look at previous daily candle action as well. You can also wait, for example, like, the liquidity revolves around everything. So liquidity, you'll have a, for example, if we just look at this as a, the wick, and then you can also have liquidity inside of this range low, which is the previous daily high or previous daily or low. Then obviously, if price takes out the high there inside of a bearish market, the likelihood of price obviously moving bearish is high if we sweep out the highs and shift bearish on a low time frame, assuming we do. Okay, so you just need to figure out step one, your daily bias, and then once you have your daily bias, now for me personally, I kind of have a neutral bias, and the way I trade is if price breaks X level, I'll be looking to buy. If price breaks Y level, I'll be looking to sell. It's quite systematic in that sense. But to trade the Power 3, especially AMD, you want to find your hard time frame bias, and obviously how you do this is up to you. I could do videos on this if that's what you'd really like to see. But let's say everything lines up for a bullish bias, and that is your framework. Okay, once you have your framework in mind, so you have the bullish bias, you then want to move on to step 2. So you want to mark up your points of interest, which is your POIs. So now you've got your bias, zoom into something like the 4-hour or 15-minute. So your bias will be obviously on the daily or the weekly, etc. Then obviously the next step will be going down to the 4-hour and 50-minute, which is where you'll mark up your potential point of interest for that day within that trading day. Okay, so you want to mark zones up like imbalances, order blocks, breaker blocks, even mitigation blocks, whatever you want to do. There's so many different things or ways and points of interest you can mark up. You can liquidity as well, and then these are just areas that price might gravitate into towards if it's not already there, but it might manipulate into before making the move. Okay, so step 3 from that point, so obviously once you've got your high time frame bias, you've marked out your points of interest as well on the charts. The next thing would be to wait for accumulation and manipulation. So you want to let price do its thing during the Asian session, because that is usually the accumulation zone, especially in the Forex market. I'll be jumping onto the chart soon to show you like the 15-minute view in terms of Asia, London and New York, and how it works and the times that you can potentially trade in. I'm not going to show you though the entries to actually enter the markets, because I've done videos like this in the past. And how I enter on the 1 minute is how I'll enter the trade, depending on everything. Okay, so like I said, obviously you want to wait for price to do its things, typically during Asian session, and that's usually accumulation zone. Okay, then you want to wait for a move against your bias. That's a manipulation. Okay, if you're expecting bullish, then wait for a sneaky bearish move down, and obviously vice versa. If you're expecting price to move bearish, and you want to wait for a sneaky price move up, right? This usually happens in early London, but could stretch into New York. Step 4 is to look for reversal signs and enter. So once price taps into your point of interest and start changing characters or breaking structure, forming breakers, etc., order blocks, now you're watching for the entry. Okay, so you've marked up your point of interest, the price is tapped into your point of interest, we're seeing the accumulation phase, price is obviously swept out the highs of the accumulation phase, let's say. We'll then obviously start to see a shift in structure to the downside off the POI that you're looking to trade for sales. This point, it would be good to look for obviously shorts. Okay, some people use in the balances to enter, others wait for more confirmation, so you kind of have to do what fits your style. Set your stop loss below the manipulation low if you're going long, and aim for the other side of the Asian range. Vice versa, if you're going short, have your manipulation or stop loss at the manipulation high. Okay, because a lot of the time, for example, let's just say if we go back to this here, so you've got the accumulation, manipulation. So if I just put us into a box perspective like this, let's make this orange and turn the opacity all the way down so you can actually see the lines. Let's just say we come into the, the range here, or not sorry, the range, the manipulation, and then we have the distribution, which is kind of the move, obviously trading in tenor direction. Okay, let's just make this blue. Okay. So like I said, what you want to do in this case is obviously if we just look at like, let's just say we have a sell bias, we're looking for sales, price is tapped into an area of interest, and you can jump into the trade on the manipulation phase, assuming you get it correctly, which I'll show you an example shortly. That's something I won't discuss, crazily. Like I said, I'm not going to discuss the entries in this video because we'll be here for quite a while. But like I said, if you want to see more videos like that, just put it down in the comments below and I'll be open to suggestions. But also just check out my general trade recaps, as that'll tell you a lot on my other videos as well. For example, maximizing profit, a recent video I've just done, which is where to target. So for example, rather than trying to target the other side of the edge of the range, which won't always go to plan, sometimes you'll see like a short-term bearish move into the midpoint of the edge of the range, and then price move bullish can continue in the direction. Again, it just depends. Nothing's 100% in trading. You're not always going to get it right, so don't have that expectation when you're carrying. Well, just go into the trading day. Okay, so like I said, watch the video on maximizing profits, as that'll show you a way that you can manage your structure, therefore get into a really nice position and potentially even carry on holding rather than targeting just into the low and then price moving an extra 50% or whatever, right? So you can enter during the manipulation phase. You can also enter within the distribution phase. Okay, how you enter is obviously depending on your entry style and your entry criteria. But for me personally, there's simple rules that I follow. It's quite systematic. So if you're in my mentorship, you'll understand exactly my way of entering the markets. Okay, but yeah. So for example, let's say you did enter a short over here, but you have your stop loss above like a recent high here. Price may just move like that and then obviously continue bearish, because that's not a manipulation, or it might be a viewed as liquidity sweep depending on what the price looks like, but it may just be a high time frame pullback. Therefore, it's better to just have it above the highs or the lows, obviously if you're going short or long, whatever, of the manipulation high or low. Okay, the next step would obviously just be to manage your risk accordingly, or just smartly in general. So keep your stop loss tight but reasonable. Maybe under the swing low or the point of interest would be a better option, or the manipulation, like I said, and just take your profits at logical levels like the opposite side of the Asian range or a key support resistance level, liquidity level, etc. in balance. Or you can manage your structure, like I said, watch the video on maximizing profits. So the point here is to trade smart, don't get greedy. That's the only thing that I can say. Now the pros and cons kind of behind the Power 3. Pros is that it gives you like structure and logic behind moves, and obviously helps you time your entries better. It protects you from certain traps. Obviously you will sometimes get trapped as well. Like I said, nothing's 100%. You're not always going to get a bang on. Also, it works across any market or time frame. For me personally, I apply this to especially on my forex pairs to the Asian, London and New York session. But it doesn't have to just be applied to the market sessions. It can just be a time within price where it ranges, manipulates and distributes. So you can apply it however you want to. Okay, it could be applied to market sessions. Like I said, it can be applied to any time frame within a price chart. And yeah, the cons to it is obviously it takes time to learn, especially when it comes to refining the entries, especially for beginners. 2 is that it doesn't always, the phases aren't always clean, especially in more volatile or wilder markets. And 3, it still has some subjectivity. You do need some screen time. When it comes to general tips to using the Power 3, you need to master price action. So obviously don't just chase indicators, you need pure price action. 2, use multi-time frame analysis, so don't get trapped on just one view. 3, combine with tools. So if you want to use Fibonacci tools, you can do, but you got volume as well, you got supply and demand as well that can help. Just things like that. Okay. Another one, just to be patient. Let the full story unfold before you jump in. You don't need to catch a move every single day in order to be profitable. You don't even need to catch a move every single week in order to end the month in a positive P&L, right? The idea is that we just have, based on the data that we've collected, we should know that we have a positive expectancy in the long term. So it doesn't matter if you have a short-term view, get rid of that, scrap that off, adopt a long-term mindset. Okay, and a longer term view on trading, because remember, trust your numbers, trust your edge, and trust that based on the data that you collected, if correctly, you'll obviously be profitable, will have a positive expectancy on the long term. Going back to the setups as well and being patient, let the full story unfold. That is just, you only need a couple or like max 5 good trades a month, right, and still be up massively. You don't need a trade every day. As traders, I get it, we feel the need to be in a position all the time in order to feel like we're doing something, otherwise we feel quite unproductive. But honestly, you don't need to be. Every emotion, especially as a beginner, that you feel towards trading is every certain situation. In fact, you probably need to do the opposite. So if you feel like you need to be in a trade, you need to do the opposite. If you feel like you need to place a trade here or place your stop loss there, you probably don't want to do that. Everything is opposite in trading until we start to adopt expectations on a set of rules that we've built. Another one, a tip as well, just be to zoom out. Always keep the bigger context in mind. Where is price at? Where is it likely to go? Is the lower time frame shifting bullish, or is it just a higher time frame short-term pullback? Keep these things in mind. Okay, the Power 3 isn't just a pattern; it's a whole blueprint of how the market moves in, like an ideal world of like a theory, right? It's how we apply it to the markets, how we understand the market, because this is what you see from time to time. Again, the key is time to time, not all the time, but time to time happen in the markets. Okay, so if you can spot it and trade with smart money instead of against it, your whole system will change. So use it, test it, tweak it, but most importantly, just stay disciplined and obviously just stay learning, but yeah, if so far this video has helped you, make sure you drop a like below and comment Power 3 down below if you're going to try it, and don't forget to subscribe as well for more related content like this, and let me know what you want to see as well. But before I end the video there, I am just going to go ahead and jump on to potential candlestick as well. I'll show you a couple of candlesticks, and then I'll show you the 50-minute chart based on the based on the 50-minute market sessions. But let's just mark up the candlesticks here, right? So we've got 3 candlesticks. Let's just go with, let's just say this is this. We'll move this one down. So this is a bearish candle. We'll make it red so it's more visually pleasing, and we'll keep this blue, and we'll put the next one blue as well, as price will potentially distribute. Okay, so as you can see here, this is based on the higher time frame. So if you have this is the 5 or 15 minute, for example, whatever time frame, a higher time frame, you may view it on 2 candles or 3 candles. Okay, 2 candles would be something like this, where you just view it if I just show it like that, and then obviously price distributes and changes in the direction, because obviously you swept out that previous wick low, which would obviously be a potential accumulation on a lower time frame. Okay, 3 candles is like this. You'll sometimes the middle candle will sweep out the low. This is more obviously reversal. If you look at the peak points within price, a lot of the time, again not all the time, you'll see price do something like that. Okay, vice versa as well. You'll sometimes get equal lows like that, and then price on the 3rd candle will wick out the low there, and then obviously shift bullish, distributing. Okay, so again, you can view it on candlesticks like that. You can view it on a 50-minute chart like this, applying to market sessions, and you can just generally view it in the markets in terms of, if you have a point of interest you're looking to trade from, price will form a liquidity, generate liquidity there. You see the liquidity sweep, or the manipulation, and then distribution. So it happens everywhere. It happens in every certain situation. The one I'm going to show you in this video though is the market sessions. So as you can see here, right, the whole point of this indicator, so this is just the Asian session range indicator. If you want the exact indicator, just comment below and I'll show you, but pretty much I've marked it up from 11 till 6 a.m. okay, and 11 till 6 a.m. is what we would refer to as the Asian range. Now I have refined mine already. I use something that's called the Asia run that I've developed and modeled myself, which is different times regarding the Asia session, but I'm going to just show you the basic foundations. Okay, so as you can see here, right, so the key sessions would be 11 p.m. till 6 a.m. This is all the UK time, by the way, so if you're from the UK you got it already, but if you haven't, you might want to just Google the time differences and just adjust accordingly. So we'll start off with the most recent price action. So obviously the purple is Asia, ASI, and obviously London is LDN, New York is New York. Okay, and obviously remember what we're looking for is Asia session to obviously consolidate, generate a high and generate a low. London session to manipulate either side depending on obviously the higher time frame bias. Like I said, I'm not going to show you the higher time frame bias, but if you just zoom out to the 4 hour, you can clearly see that price is obviously consolidating. As for the daily, that's kind of different, but I won't go over that just yet. I'll probably do that in a different video. But like I said, how you form your daily bias is up to you, but currently the 4 hours is just ranging. So if you to look at the bigger picture of the 4 hour range, you can see that price is just more so bouncing between these highs and these lows. So if you're using a short position, let's say over here on the retest after the distribution is played out, you targeting down into these lows or these lows is kind of lower probability. Okay, so you always keep the high time frame in mind, the bigger picture context. Okay, so as you can see here, we had this Asia session high and Asia session low. What did price do? We came into London session, or 7 till, so basically 11 p.m, 6 a.m. UK time, Asia. 7 p.m, 10 a.m, these are the times I personally trade in, and this is what I refer to as my London session. New York is 12 till obviously 3. Now these aren't going to be the exact times that you're going to be seeing in the markets in terms of the Asia session, London session, etc. Asia session, yeah, but London session, New York, like New York opens at 1 p.m, for example. These are just the times in which we're looking or expecting a lot of the time for the manipulation and the distribution phase to happen. Okay, now again, sometimes the manipulation phase can happen in New York. It won't always be in London. So for example, there are some differences that you can notice. For example, if an Asia session has trended like that, for example, if on the high and low, and then London starts to consolidate and stays inside of the Asia session, you can expect in New York to take out either the New York low, London low, sorry, or the Asia low. Okay, so just keep that in mind. It's not always going to be, but if you just focus on this, then that's fine. Okay, and like I said, you can just obviously trade based off the manipulation phase, especially if you understand, for example, the way we trade. If you understand the way that ZCFX trades anyway, you can clearly see that price did take out the high here, but we also mitigated something to the left, especially I'll just mark it up for you guys anyway for the sake of this video. But that was a point of interest that I had actually sent out to my students, and also a couple of students looked to short from. And that was anticipating that, yes, we took out the edge of highs, we tapped into POI. So yeah, we just simplify the trading process really. Then obviously anything after this point onwards, because obviously we generated a high there, anything below this point onwards would just be more so looking to stack in alignment with the short position that we potentially had the bias from as we sweat out the highs there. Like I said though, price is not always going to work out. Don't have, don't expect it to work 100% of the time, because if you do, you're not going to succeed in trading. Anyways though, as you can see here, we swept out the highs and we had a nice shift bearish. The lows are still intact, so at this point obviously, well, the lows got taken during this New York, but obviously shorts from this point is fine, but already the lows have already been taken, so it's low probability, but it's still fine because of why we had the range high, we had the range low, price mitigated, filled in the balance there, tapped into the point of interest. So assuming the M1 played out nicely, you can look for shorts down into this area. Okay, that's just trend following based on the M15. Anyways, shorts from this point area is fine because we also swept out some high time frame highs there, and also swept out this high there as well, and also took out the edge of highs. So shorts from that point is fine. This one here I've already discussed, took out the highs, shifted bearish, and also distributed as well. You can look for shorts from this point onwards, but again, it's not within the key trading times. And remember, the H4 is ranging. We've already tapped into the extreme lows of the H4 range, so price coming back down into that area is kind of low, so just keep out where the high time frame is at in mind. This one as well, as you can see here, we formed a high. We took that out there, and as you can see, London session, we had a nice potential short-term sell-off, especially as we came back into here and we tested this area as well. We had a nice short-term sell-off there. Now again, like I said, sometimes, like I said earlier in the video, you're not always going to see the edge lows be taken. So how you manage to trade is up to you. But as you can see here, if I just mark up the edge, it tapped into the midpoint. The midpoint is the blue line. So the different scenarios why it will tap into the midpoint and why it will tap into the lows. So don't always get fixated on the highs or the lows being taken as soon as you're in the trade. Just trade and manage your structure, take partials off at once too would be my best kind of opinion on this. But like I said, check out the video on maximizing profits. Okay. But yeah, shorts from this point onwards is fine. And shorts from this point onwards is also fine as well. Moving on to this one, as you can see here, this kind of didn't work out as it should, but this is more so a continuation. Like I said, you're not always going to see it work. However, though, we did obviously form a high, we formed a low. We had a short-term bearish move from here, but it wasn't within the key trading times. But coming to the key trading times, it looks like we just mitigated this area. And I believe this is actually where a couple of my students took a long position, because remember, you're not going to be, it depends really. I try and teach with a neutral bias, so that if price breaks, for example, X level, we can look for shorts below here. If price was to break above Y level, then we can look for longs above here. Okay, so coming into that New York session, you can either just continue or anticipate a reversal. When you use high time frame, you can clearly see that price is obviously mitigated inside of this high time frame range high and range low, and obviously mitigated the extreme POI already. So looking for longs from this point onwards is fine and perfect. Okay, as we've already approached range highs here, it kind of decreases the probability because we can expect a pullback at some point based on the market structure knowledge that we have. Now this one here, as you can see here, we had a pretty trending Asia session. Price did take out the low and provided a nice term short opportunity, at least into the midpoint there as well, very nicely. However, we started to consolidate and we came into New York session, and as you can see here, we had a nice wick rejection of the previous London highs, then also shifted bearish there, and obviously as you can see there, based on the high time frame bigger picture, range low, range high, noticeable straight away. So obviously looking for shorts down into the higher time frame point of interest based on this is absolutely fine to do so. You have some mitigations there as well, providing a nice supply chain. I'll do a couple more and then I'll end the video. Don't want to be here all day, but you guys get the gist of it. Like I said, how you refine your entries is up to you. I'm not going to show you that just yet, but we can do that in a separate video if that is what you'd like to see. Anyways, as you can see here, yes, it's kind of trending, but we create these equal lows here. And as you can see, price had obviously swept out those highs there, causing this sell-off. We then obviously came into New York, which is just a nice pullback into this supply area there, which it previously mitigated from and shifted bearish from. And also a potential breaker there as well. And then obviously took out the lows there as well. Okay. Yeah, I'll do like two more, I promise, and then I'll end it. And then as you can see here, we also had this Asia session, took out the highs here, shifted bearish, New York, or just a continuation of what happened there. Okay, there's the one as well. So as you can see here, Asia range, London. Well, we did take up the highs there previously, but I won't go over that just yet. But that was a nice short opportunity, and I believe actually a couple of students took that one as well. I'm not even joking either. My students are just insane. As you can see there, we took out the lows though coming into this session. Then obviously it wasn't inside of my trading time, so if you're looking for longs here based on whatever reason, you might have been stopped out. But obviously coming into the distribution phase, we traded back up into the area, but this just looks like a mitigation there. So kind of a tricky day to be trading there. But yeah, you'll obviously, going back to scenarios as well, the better plays are obviously midweek kind of, and obviously like, you know, other factors, external factors have a big role in this, for example news day, etc., and you know, just certain days and stuff like that. And just, you know, you need to understand where prices are on a high time frame. Like for example here, you know, this just looks like straight away high time frame high and high time frame range low. So for you to be looking for longs in this area, it didn't really come back down into the discounted part of that high time frame range until over here. Okay, so just keep that in mind. Anyways though, we'll just do this one as well because I'll end it on, I'll do two more. I promise I'll do two more, I promise. Okay, anyways, as you can see here, Asia range, then we just, there's more so trending. London came in, just continued, to be honest. But that's why you need key levels and structure breaks in your direction. So for example, we had this high, we had this low form. If price was to take out this low, then yes, I would anticipate shorts. As it didn't though, it just respected this range and instead continued bullish. We came into New York, what price do? We actually formed the top here within the high time frame range high. Then obviously we more so consolidated, but we did shift bearish there. Coming to the next trading day, we mitigated part of previously what happened, and obviously sold off from there. So sales from this point onwards would have been fine. And then the last one, we'll end it on a good note here actually. As you can see, Asia session, nice consolidation there, no trending whatsoever, quite a low volume. From the low, took out the low here during London, and obviously buys from this point or waiting on the retest heading into New York would have been the perfect play there. As you can see, riding back up into the highs, depending on obviously where you want to target. But obviously again, if you're trading with a high time frame, this would be a high time frame high time frame low. So obviously if you're looking for longs, this is high probability to go long because why? We swept out the Asia range lows, tapped into a high time frame area of interest, and obviously looking to target into those high time frame highs is fine. Like I said, if you stack the probabilities against you in your favor and you catch like 3 moves like this, even like let's just say 5 moves on a monthly basis like this, you're going to end the month on a crazy win streak or a crazy, you know, big win. But yeah, that is the power through AMD applied to the charts and explained. Guys, as always, if you loved this video, make sure you drop a like down below and hit the subscribe button if you want to see more stuff like this, as it just motivates myself to keep going. But hopefully I've simplified it enough for you, because that is my goal. I'm here to simplify trading as much as I can in certain concepts. So let me know what you want to see, guys. Take care, and I'll catch you on the next one.